Charlie Munger once said something that most people never truly understand, something so simple, yet so powerful, that it separates those who stay average from those who quietly accumulate wealth over decades. He said, "The first $100,000 is a beat, but you must do it." Asterisk. Most people hear this and think he is talking about how hard it is to save money, but Munger's message runs deeper than that, because the first 100,000 is not just a number. It is a threshold, a point where your relationship with money fundamentally changes. Before reaching that threshold, every dollar you earn comes from your effort, from your labor, from your time. You trade hours for cash, but after crossing it, money starts to work for you, in ways most people never witness. It starts to compound, and compounding is a silent force, a quiet engine of wealth that rewards patience, discipline, and consistency. The remarkable thing is that compounding does not require genius. It does not require complex strategies. It does not reward chasing the next big thing. It rewards one habit, a habit so simple, so deceptively easy, yet so rarely practiced, that it has the power to turn $100,000 into $1 million, and beyond. That habit is relentless, automatic reinvestment. Every gain, every dividend, every profit, you put it back in. You do not celebrate. You do not withdraw. You do not get distracted. You let it grow, quietly, relentlessly. Munger said, "The big money is not in buying or selling, but in the waiting." And this waiting is not passive, it is disciplined, purposeful, intentional. Most people fail because they cannot wait. They panic when the market dips. They get bored when progress seems invisible. They interrupt the machine of compounding for instant gratification, and every interruption, every premature withdrawal, resets the clock. The first $100,000 is painfully slow to accumulate. It can feel like a struggle, a grind, a test of patience. But that is the point. The process teaches restraint. It teaches discipline. It teaches the mindset of wealth. Once the first 100,000 is saved, something magical begins. Money no longer depends on your labor. It starts growing on its own, and compounding accelerates with time. The next 400,000 seems to arrive faster, and the final 500,000 almost feels automatic. It is here, at this stage, that most people fail to recognize the quiet miracle occurring. They cannot see the invisible force building. They only notice what has not yet happened, and because of this impatience, they stop. They withdraw. They miss the long-term reward. Munger knew that wealth is rarely made in a flash. It is made in decades, through small decisions compounded over time, through habits practiced consistently, through patience, through emotional control. This is why he studied, read, observed, and reflected relentlessly, not for instant results, not for excitement, not for accolades, but for clarity, for understanding, for judgment. Because judgment compounded over time is as powerful as money. It allows you to see opportunity when others panic. It allows you to avoid mistakes when others chase trends. It allows you to build wealth quietly, without drama. And this is exactly the framework behind turning 100,000 into $1 million. You invest in assets you understand, you reinvest gains, you avoid distractions, you ignore hype, you let time do the heavy lifting. The first decade may feel unrewarding, it may feel like nothing is happening, but if you persist, if you maintain the habit, the compounding effect will explode. You will look back years later, and realize the machine has done more work than you could have imagined. The key is discipline, patience, and the refusal to be distracted. Munger did not rely on luck, he relied on principles, on habits, on behavior, on consistency. And anyone can follow this path. No genius is required, no insider knowledge. Only the willingness to do the hard work early, and the patience to let compounding do the rest. Once you grasp this habit, something remarkable happens. You begin to see money differently, not as a tool to spend immediately, not as a reward for labor, but as a force that grows silently. Compounding rewards restraint, and it punishes impulsiveness. Munger often emphasized that the key is not making perfect investments. It is avoiding mistakes, avoiding decisions that destroy compounding. It is far easier to stay out of trouble than to constantly chase brilliance. Most people think they need to be exceptionally smart to grow wealth. But Munger proved the opposite. The intelligent investor is disciplined, patient, emotionally stable, and capable of letting time magnify small decisions made repeatedly over years become enormous advantages. The first 100,000 is the threshold, the foundation of this process. Without it, compounding never reaches its full potential. And this is where most people fail. They do not value the initial slow phase. They do not respect the small incremental steps. They seek instant gratification. They chase trends. They panic. They give up. And the wealth they might have built evaporates, Munger said. Spend each day wisely. Avoid the mistakes that destroy your future, and let compounding quietly do its work. These words are not abstract. They are actionable. They are principles that can guide your financial decisions. Let's consider how this works in practice. Imagine you save your first $100,000. You invested in simple, reliable assets, stocks that represent real businesses, or funds that track broad markets. You reinvest dividends. You let the money grow. Without touching it, you do not withdraw. You do not speculate. You do not react to daily news. You allow compounding to take over. Over the first decade, the growth may feel slow. You may watch your portfolio fluctuate, and the temptation to sell may arise. But if you persist, you continue reinvesting, and maintain discipline. Over time, the portfolio grows faster, because compounding accelerates. The gains of previous years now generate their own gains. This is the snowball effect. The money begins to work for you, rather than you working for the money. By the second or third decade, the results feel almost automatic. A small initial sum now produces exponential growth. It is here that the patience, discipline, and habits you developed early pay off in ways that are almost magical. And this is why Munger always stressed starting early, even if you start small. Even if you can only save a modest sum, the process works. The earlier you start, the longer compounding has to do its work, and the easier it becomes. Emotionally, financially, psychologically, you gain freedom, you gain clarity, you gain options, because wealth built through compounding is resilient. It is not dependent on luck. It is not dependent on timing. It is dependent on your behavior, your discipline, your habit of reinvesting, your ability to wait. Most people underestimate time. They think wealth requires extraordinary luck, or extreme intelligence, or bold risk-taking. But Munger proved that time and patience are the most powerful forces in investing, he said. It's waiting that helps you as an investor, and most people just can't stand to wait. This is why the slow, disciplined approach is so effective. It is quiet, invisible, and relentless. Most people ignore it, but those who practice it see the results. They do not notice day-to-day changes. They do not obsess over market swings. They focus on consistency, and let compounding amplify their efforts. Munger also emphasized the importance of avoiding mistakes. Not every investment needs to be perfect. You just need to avoid destructive decisions, avoid high-risk gambles, avoid impulsive behavior, avoid debt that eats your savings, avoid the temptation to withdraw early. Each mistake slows compounding. Each mistake reduces potential wealth, and each mistake can take years to recover from. This is why Munger's approach is conservative, measured, disciplined, and ultimately effective. Because compounding magnifies both successes and failures. The disciplined investor benefits. The reckless investor suffers. It is that simple. The lesson is clear. Master patience. Master restraint. Reinvest relentlessly. Avoid mistakes. And let time work its magic. These are the habits that turn $100,000 into $1 million. And more importantly, they are habits that create lasting financial freedom. The first 100,000 may feel like a struggle. The growth may feel slow. But the results over decades are extraordinary. This is the quiet power of compounding. And this is the wisdom Munger tried to impart. It is not flashy. It is not exciting. It is steady. It is invisible. And it works. And this is why the discipline of patience, of habit, and of reinvestment cannot be underestimated. The beauty of this process is that it is entirely under your control. You are not relying on luck. You are not relying on timing. You are relying on behavior, on decisions, on the habits you build. And these habits, practiced consistently over time, compound just like money. Munger often said that the difference between the wealthy and the average person is not intelligence. It is temperament. It is the ability to stay calm, to stay consistent, to avoid impulsive behavior, and to let compounding quietly do its work. The first 100,000 is merely the starting line, the threshold that separates those who can play the long game from those who cannot. It teaches discipline. It teaches patience. It teaches the mindset necessary to handle larger sums of money in the future. Once this habit is ingrained, the journey from 100,000 to 1 million becomes almost inevitable. Because each decision you make reinforces the machine of compounding. Every dividend reinvested, every gain left untouched, every small step adds to the total. And over years, even decades, this small accumulation transforms into something enormous. The first decade may feel slow, you may feel frustrated, you may wonder if it is worth the effort. But this is the test. This is the part that separates ordinary investors from extraordinary ones. You must resist the urge to seek instant gratification. You must resist the temptation to gamble. You must resist the pressure to withdraw funds for short-term desires. Munger described compounding as the eighth wonder of the world. Not because it is mysterious, but because people fail to harness it. Most people cannot wait. Most people interrupt it. And most people never experience its true power. But those who do, those who practice patience, discipline, and reinvestment, see results beyond what seems possible. The numbers may start small, but they accelerate over time. The next 400,000 comes faster than the first. The next 500,000 feels almost automatic. And then, seemingly suddenly, you have $1 million. And this is the power of the habit Munger taught. It is quiet, invisible, and unstoppable. It rewards patience, and punishes impulsiveness. It does not depend on luck or genius. It depends on consistency, discipline, and the ability to wait. Munger also emphasized the importance of learning, of reading, of observing, of absorbing wisdom, not to chase trends, not to predict the market, but to improve judgment, because judgment compounds as well. Better decisions now lead to better outcomes later, and over decades, these better decisions add up to extraordinary wealth. The lessons are simple, but rarely practiced. Save consistently, invest in reliable assets, reinvest your gains, avoid impulsive decisions, ignore short-term noise. Let time magnify your efforts. Patience, discipline, consistency. These are the keys. Most people focus on trying to be clever, on chasing short-term gains, on seeking instant results. But Munger showed that steady habits, applied over decades, outperform brilliance every time. The journey begins with the first 100,000. It begins with building the habit of not stopping. And once that habit is established, compounding becomes your ally. Your portfolio grows silently. And wealth accumulates almost invisibly. Few notice until it is too late. The compounding machine has already done its work. You have built something extraordinary. Without drama, without risk, without shortcuts, just patience, consistency, and the relentless habit of reinvestment. This is how Charlie Munger became wealthy. This is how ordinary people can become extraordinary. By following the same principles, by respecting the process, by embracing patience, and by letting time do the work that few others are willing to allow. The first 100,000 may feel like a challenge. It may feel slow, but it is the foundation, the cornerstone, the launch pad for future wealth. And the habits you build in this phase will define the trajectory of your financial life. Munger understood this, and he applied it consistently. He avoided distractions. He ignored hype. He reinvested everything, and he waited, decade after decade, until the results were undeniable. This is the power of habit. This is the power of compounding, and this is the lesson that turns a modest starting point into life-changing wealth. Those who embrace it, those who practice it consistently, will find that 100,000 is only the beginning, and 1 million is merely the natural outcome of discipline, patience, and persistence. By now, You should begin to understand the quiet power of these habits: the discipline to save, the habit of reinvesting, the patience to wait decades for results. These are not flashy skills. They do not make headlines. They do not guarantee instant gratification, but they create something far more valuable: freedom, security, and true financial independence. The difference between a life of stress and a life of choice. Munger often reminded people that wealth is rarely made through luck. It is made through consistency, through discipline, and through the relentless application of small decisions over long periods. Most people miss this. They chase excitement, they gamble, they withdraw funds at the wrong time, and they fail to see the long-term effects of their actions. But those who understand the system, who respect compounding, and who develop the habit of reinvestment, see a transformation that feels almost magical. Money that once required work now works for you. It grows silently, steadily, exponentially. It rewards restraint. It multiplies patience. It amplifies consistency. And it punishes impulsiveness. The first 100,000 is the foundation. It teaches the lessons you need. It builds the mindset. It strengthens discipline. It sets the stage for exponential growth. Once you have mastered this threshold, the path to 1 million becomes inevitable. The next stage is about refinement, investing wisely, choosing assets you understand, avoiding unnecessary risk, and continuing to reinvest. At this stage, emotional control becomes critical. The market will fluctuate, unpredictable events will occur, but your response determines whether compounding continues. Munger emphasized the importance of avoiding destructive behavior, avoiding impulsive decisions, avoiding distractions, avoiding the temptation to cash out early. Every mistake delays the compounding curve. Every reckless action reduces potential wealth. Consistency is your greatest ally. Every small choice adds up over time, and over decades. These small choices become enormous advantages. By the time you reach $1 million, you will have experienced years of slow growth, moments of doubt, temptations to quit, and yet, the patient investor remains steadfast. The compounding machine grows silently, and eventually, the results become undeniable. You will look back and realize that the process was simple, but the lessons were profound: patience, discipline, consistency, and the ability to let time work for you. These are the traits that define long-term success. Munger also reminded us that wealth is not just a number. It is a mindset, a habit, a way of thinking about money, life, and opportunity. When you internalize this approach, the results are inevitable. You begin to see small decisions as investments in your future. You become more deliberate, more strategic, more focused on long-term outcomes rather than short-term gains. And this shift in thinking compounds just like money. Your judgment improves, your decisions improve, your financial life transforms. It is not magic. It is the natural outcome of applying consistent principles over decades. The final lesson is this: the first 100,000 is only the beginning. The journey is long. The growth may seem invisible, but the disciplined investor will reap extraordinary rewards by embracing patience, by reinvesting relentlessly, by avoiding distractions, and by letting time amplify small, consistent decisions. The machine of compounding will do the rest, and what seemed impossible, $1 million, becomes the natural, inevitable outcome of your habits. This is the quiet, powerful, and life-changing wisdom of Charlie Munger. It is simple, yet profound, and it can be applied by anyone willing to do the work. Exercise patience, and commit to consistent reinvestment. If you follow these principles, your financial future is not a matter of luck. It is a matter of design, a design built on discipline, patience, and the unstoppable force of compounding.